This video is brought to you by 8% Value Activist Substack newsletter. If you like this video, please subscribe this channel as well as our Substack newsletter. Your subscription keeps us going, and we thank you for your support. The links are at the end of the video as well as in the comment sections. Today, we will be introducing the screening tool within Fiscal.ai to screen for activist stocks. Activist shareholders are an interesting breed. We shall explain in detail what they do in this presentation. But first, let's go through the disclaimer. Most of the content is generated by AI, including the beautiful P&C logo you see here. Although there is nothing really P&C, we just made it for fun. We must emphasize, though, that this is not investment advice. We have a whole disclaimer slide coming up. Yep, this is the full slide. Disclaimers. Please take some time to read through it. I will wait. You know what? Just copy it into your favorite AI chatbot and ask her to summarize it. Time is money. Let's go. Okay, who are activist shareholders, and why are we interested in screening what they will buy? Activists are a special class of investors who buy significant stakes in companies, usually a couple of % or more to affect changes they would like to see in order to bring the share price up. As such, they are usually looking for cheap companies stuck with certain issues. They try to unlock value by resolving these issues. Activists have refined their toolkits to do such things really well. Activists can change management or divest poor-performing businesses, or even take entire companies private. But usually, just plucking the low-hanging fruits such as improving investor relations, raising dividends, or doing share buybacks will be enough to bring share prices up. Therefore, following activists is a profitable strategy. Shareholder activism is coming to Asia, because roughly half of the listed companies in Asia trade below one-time price to book. This is caused by years of neglect, as every market participant and her dog, and also her cat, are focused on the US and the Magnificent Seven. No one is looking at Asia. No one. And so, Asia has gotten cheap, really cheap. Japan is currently the biggest hotbed with 70 to 80 activist funds going after a few hundred listed Japanese companies. In this presentation, we will use some simple stock screens to look for stocks that activists tend to like in both Japan and Asia. First up, we will screen for some Japanese names. We are using the in-house screening tool created by Fiscal.ai. It is simple and intuitive. I will encourage you to try it out. Apart from filtering the country, which is Japan, and market cap range, which we cut at $1 billion, we have the following key criterias. 1. We want revenue to at least be flat. In Japan, there are many companies with declining revenue. We do not want that. This is depicted by the orange arrow. 2. We want companies with no debt and healthy free cash flows. This is the red box we highlighted. Think about it intuitively. It doesn't make sense to buy a company with a lot of debt and not making money, right? Activists are smart investors, so they look for debt-free, healthy free cash flow companies. We want to follow them. Lastly, we want to look for companies trading below book. This is a prerequisite. With the criteria set, we asked Fiscal.ai to run the screens, and it churned out 2 pages of Japanese companies. We have highlighted the following companies in red here, already targeted by activists. They are Kyocera, Kawasaki Kisen, a shipping company, Medipal, Alps Alpine, a car electronics company, and Japan Petroleum Exploration. Gosh, we really scored some wins with this screen, didn't we? Based on the author's experience, by that, we mean the human author behind this analysis, and not me. The AI-generated bubbly girl, the interesting plays could be Kyocera and Medipal Holdings. Kyocera was founded by the Japanese business legend Inamori, but has lost its way over the years. It has many good businesses and is trading extreme cheaply if we factor in the cross shares that Kyocera holds. Now that the activist Oasis is engaging the firm, there is a good chance it could turn around. Medipal is a healthcare distributor currently owned by Silchester, the UK-based activist. This name deserves more studying too. The rest of the companies listed are part of bigger establishment or stalwarts of successful businesses in the 1990s and early 2000s. Hence, it might be difficult to engage these companies and change things. This next slide shows a few more companies engaged by activists. However, we would like to highlight the 2 companies in the yellow box. They are Tokai Rika and Tsubakimoto Chain. I have to first apologize about the name pronunciation. Somehow, I get the same words wrong at times. I believe this would get better in future videos. After all, I am AI. I will be smarter than you soon. Okay, let's get back to the presentation. While there are no known activists in these two companies, yet they have their idiosyncratic stories that might interest both activists or private equity. Tokai Rika is currently 30% owned by Toyota, and an activist could pound the table and ask Toyota to take the company private. Toyota is under pressure to reduce the number of cross shareholdings and parent child listings across its supply chain. As such, some activists pushing Toyota to take Tokai Rika private might just work. Tsubaki Moto Chain, a branded metal chain manufacturer, does not belong to any group and looks like a target for both activists and private equity. We have not done deep research in these names. So, DYOR, do you own research? The rest of the companies could be too small, with no liquidity, and hence there is less activist interest, and we should similarly avoid them, as it would be difficult to exit when the time comes. Next, we move away from Japan into Asia, or rather Southeast Asia. We have used the same previous screen with some tweaks. Asia is some years away from real activist actions because the original founders, or the state, meaning sovereign entities, still own many companies. As such, activists are not able to engage these companies yet. Having said that, we do see activist action from time to time. Hence, we thought it would be interesting to simply screen for potential ideas now. We have excluded India, China, and Hong Kong because they deserve separate screens. We will focus on the top 6 economies in Southeast Asia. As per the Japan screen, we look for net cash and free cash flow companies trading below book. We made an important change though. We want the companies to pay us dividends. If it is going to take years for activists to go up against owners or the state, we want to get paid for waiting. In this slide, we show the list of companies generated, and we see a lot of Indonesian names across various sectors. Unfortunately, most of these companies still have their founding families or big shareholders having controlling stakes. This means that activists will not be able to gain control or wield influence easily. We also tend not to look at financial companies because they are kind of a different animal. Cash on the balance sheet do not necessarily belong to shareholders. As such, the number of interesting companies are far and few in between. There are only a handful of companies which the controlling shareholders have sold down to circa 30% stake. The first one is Joy with 2 Ys, which we highlighted with the orange arrow. We shall discuss more about Joy in the next slide. It is interesting to note that 2 companies have more cash than its market caps. These are highlighted with the yellow arrows. We won't go into them today. Then there is Hopar, highlighted in the red box. Hopar has been an interesting stock in Singapore because of its holdings of its parent co, UOB, the second largest banking group in Singapore. Okay, let's dig a little into Joy, which was one of the stock we screened out as interesting. While the company is based in Singapore, its founders are from mainland China, and it is listed on NASDAQ. Joy operates video-based social media platforms boasting 250 million global users. In comparison, X or Twitter has about 640 million users. It has positive free cash flow for the last 10 years and has generated a lot of cash. It recently sold a subsidiary to Baidu, and net cash increased to circa 50% of market cap. However, digging a bit deeper reveal more issues. The details are explained well by Sven Carlin with the link as shown. In short, Joy seems like a 250 million social media platform that nobody seemed to know about a lot. Granted, it is not as big as X, but still, according to Sven, it is inexplicable. Without digging further, it is unclear if Joy is investable. Accounting numbers, like revenue, free cash flow, ROE, form the basis of any analysis. If the accounting numbers are not real, how do we analyze and invest? Of course, the stock is listed on NASDAQ. The books are audited, so the risk that this is a fraud is minimal. Plus, Joy pays a healthy dividend, so that makes it even less likely to be a fraud. As such, I think this falls into the too hard bucket. It is too hard to figure out whether this is a good investment or not. In such cases, it's better to just move on. If you are still keen, please do your own research. We hope to share more about Hopar. That will be the next slide. Okay, this is the meat of this presentation. Hopar is a unique Singapore stock primed for activist action. It is cheap, has lots of cash, and pays dividend as shown in the red box. Its sister company, United Overseas Insurance or UOI, has been sparring with an individual activist shareholder for a couple of years. But let's look at Hopar's business before we talk about activism. At its core, Hallpar's healthcare business, with the Tiger Balm brand, has been a consistent free cash flow generator. It owns some real estate and operates some property businesses, and it also operates two theme parks, Underwater World Singapore and Underwater World Pattaya. But the crown jewel is its ownership of 30 million shares of UOB, which is worth more than a billion Singapore dollars and 40% of its market cap. Investors have asked for this to be sold and the money returned to shareholders. Of course, the controlling We family with more than 35% outstanding shares can always say no. And they have said no. So, Hopar has always been cheap when we incorporate its property holdings and investment assets. If you believe that some activists someday will go up against the Wees and shake things up, you are paid to wait. Hopar pays a good 2.8% dividend. We hope to do a deep dive on this name in the future. With that, we have come to the conclusion slide. To reiterate, activists look for cheap companies, with cash on their balance sheets and with businesses generating strong free cash flows. Our newsletter monitor these names because shareholder activism is coming to Asia. We have so many value names trading below book. There are many more interesting names in Japan, and we will study more and introduce them via our newsletter and via video formats like this. For Asia ex Japan, most names are still owned by founders or controlling entities. But Hopar looks interesting despite rallying somewhat. We hope you have enjoyed this video. Please follow us and subscribe. Your generous support is greatly appreciated.